Hi, this is Thursday, June 17th, 2010. And what I'm going to talk to you today is about 0-point mortgages and the fact that they may disappear off the face of the earth and cause people to have to pay a lot more money to get a loan. You can thank House Financial Services Committee Chairman Congressman Barney Frank of Massachusetts, who indicated yesterday during a conference committee meeting on the Financial Services Committee that is making the House and the Senate versions into the perfect thing to give to the president to sign. He said the yield spread premiums would be banned. Such a prohibition would eliminate 0-point and no-cost mortgages for Americans that deal with mortgage brokers and mortgage bankers. And I'm reading now from a blog post that I have, but you'll get the idea. Most home buyers in the country elect 0-point mortgages to save on upfront or out-of-pocket costs when purchasing or refinancing real estate. This ban will cause millions of potential home buyers and current homeowners to be unable to finance homes because of the increased costs. Greatest impact will be felt on low and moderate income borrowers, especially in the minority communities. Okay, thank you, Mr. Frank, the Democrat, for helping make home ownership tougher for low and moderate income people. What party are you with? Mr. Frank's misdirected beliefs, and that's not my words, but they were really good, come from the days when some mortgage originators overcharged borrowers for loans that were developed and made available by large federally regulated institutions such as, ready for this list? Countrywide, AmeriQuest, Washington Mutual, World Savings, Fannie Mae, and our friends at Freddie Mac. Mortgage brokers and their originators are now the most heavily regulated part of the mortgage financing industry. Although previous state regulated, they now follow a strict uniform national standard known as the SAFE Act. Some standards include 20 hours of pre-education, 8 hours of continuing education, background investigations, fingerprinting, registration in the national database, and the passing of both national and state tests, which I've done. Bank employees, and you'll love this, the guy at the bank is taking your mortgage application, who perform the exact same functions as a mortgage broker or mortgage banker, are exempt and will only be required to register with the national database. And a little side note here. I had a guy call me and says, I've been in the mortgage business 20 years and I've taken the test 4 times and I can't pass it. Do you know any banks I could go to work with? Anyway, back to my text here. The banks themselves will be unaffected by the YSP ban, leaving them with little competition and a clear path to continue what would be the largest increase in mortgage costs ever in the history of this country. And that's my line. So if they're trying to get rid of brokers and mortgage bankers, they're just going to jack up the rates, jack up the fees, and guess who's going to pay? You. Anyway, going on, Chairman Frank will continue to allow banks to pay and or receive what are called service release premiums, SRPs, which are the exact equivalent of a yield spread premium. It's ridiculous. It's the exact same thing done with a different name. It is also important to note brokers have been disclosing their yield spread premium compensation to consumers since 1992 as mandated by Housing and Urban Development. However, banks and lenders have no such requirement, which make brokers the victims of their own disclosure. Anyway, this last paragraph is so true. We urge everyone in any part of the real estate and or mortgage industry, along with the consumers, consumer protection groups, trade organizations, and unions, contact their senators or representatives and demand that Chairman Frank remove any reference to yield spread premiums or any cap on originator compensation that might affect low and moderate income homeowners from the final reform bill. Competition, free market, remember that stuff? And industry already provides such safeguards. Congress needs to allow America to grow its economy and real estate industry without further overregulation. Now, I'm not a Republican. That's what makes this even more interesting. This sounds a little bit free markets, blah, 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 but it's not. It's about that the banks are going to jack up everything. Can't have this. The next thing you know, they might be coming after real estate agents and saying, yeah, you can only make this much, and then allowing the banks in real estate and excluding them from the limitations. It's the same thing. They're not going to stop here. This is Fred Glick. Hope you've enjoyed this, and if you need to contact me, I'm at 215-852-4469, or you can email me, fred@fredglick.com. Thanks. Have a great day.